I wanted to talk to you about DeFi, decentralized finance. It's something that I've only really briefly touched on a long time ago, so I kind of feel like I've ignored it. But it hasn't gone away, has it? Decentralized
No.
finance is probably here to stay. Would you say?
Yeah, so like even though the market's come down quite a bit, and a lot of people aren't active in crypto anymore, all of that tech still exists.
Yeah.
And I think when I checked last week, it was about 58 billion US dollars is currently locked on DeFi protocols in
Okay.
total on Ethereum alone, so one blockchain.
Yes.
So that's a lot of money still kind of floating around in that space, being used for all different purposes.
So when we say total value locked, or TVL, I think is the acronym, right?
Mm.
Total value locked. That just means that that's how much money is inside of that ecosystem, this
Yeah,
blockchain ecosystem.
and like decentralized finance applications.
Sure.
Yeah, so like the whole ecosystem will have probably a lot more money floating around, but that's the kind of dollar value that's sitting in these applications that are listed and tracked.
Right. So DApps, DApps,
Yeah.
decentralized applications on the blockchain. Okay. So in essence, what is it about decentralized finance that you are attracted to?
Probably just the tech. So when I got into crypto, I learned a lot about kind of economics and finance, how banks work. And when you kind of look at that kind of stuff and the services that a bank offers, you don't really see a way of how our society can offer that. With you always need a bank or a middleman that you can trust with all the finance side of things. But with decentralized finance, it's kind of people have worked out a way to do that without needing some middleman in the middle to trust. Instead of having a third party that you trust, you kind of just trust computer code, which can't really be faulted or can't be falsified.
Would you say that your education around economics and finance primarily came from your interest in this, or did you have a background in that before?
Yeah, pure just interest, like just my own learning. So
To be honest, that's probably the way we're probably going to learn going forward
mm,
anyways, not necessarily through titles and letters behind our names, but
yeah,
just out of interest powered learning, which is probably, to be honest, far more useful, I'd suggest. So, when you were learning about economics and finance, did you find that it was largely tinted or flavored with the interest that you had? Like, I'm going to guess if it's decentralized finance that you were drawn to, or crypto assets in general, you probably have a bit of a libertarian leaning towards your economics. Would that be fair, or how would you
yeah.
describe yourself there?
I think it's when I was trying to learn about Bitcoin, you kind of understand the economic side of Bitcoin, kind of the maximum supply. But in a lot of the content that I was watching to try and understand Bitcoin, it always reverted back to how we used to have the gold standard and how banks currently work, and all that kind of stuff. So in that process, I learned all about how the banks currently work, how currencies currently work versus how they used to back in the day, and all kind of ties in quite a bit. And I think anyone that learns kind of how currency and banks work, it's nothing that you would have thought originally in your own head. You would have never thought that's how the system works. So I think a lot of people get surprised, and I myself too. So I think it's quite easy to lean towards that kind of view of a system that I wouldn't say manipulated, but isn't so extreme.
Yes.
Yeah,
Yeah, I was watching when I was preparing for today. I was just trying to watch a little bit of content on YouTube around what's bad with decentralized finance,
yeah,
right? So I discovered this guy. His name is Patrick Boyle. I don't know if you've come across this guy. He talks a lot about economics, finance, and he's really, really critical of the crypto ecosystem in general,
yeah,
but in a fairly nice and somewhat balanced way. You can't really be critical and be balanced in my view, but
yeah,
it was interesting, and I thought it was really useful to kind of get a feel for some of the blind spots that you might have if you are just solely focused and enthusiastic about the technology. You're going to consume content that enforces that pre-existing
mm,
narrative that the existing financial system is dying. It's a
yeah,
dinosaur. It's not fair. It's inequitable. It creates all these distortions. Therefore, it needs to be replaced.
mm,
And DeFi is the savior, and
yeah,
we just need to jump on that bad boy, and it'll be fine. And that I genuinely believe that's probably true in the long run.
right,
But in the short run, there's probably going to be a lot of creative destruction
mm,
happening, a lot of disturbances in the forest, and a lot of tussles between the existing and the not yet.
yeah.
And I wanted to know, just from your perspective, do you feel also like this is a battle or this is a process and we're early, but it's going to get a lot better? Like, where would you say we are in the adoption curve?
I think we're still early. I think banks are going to have to compete on some kind of level eventually when it gets more user friendly and trustworthy in different ways. But I mean, ideally, I kind of see banks and traditional finance mixing with DeFi to merge kind of the best of both worlds into one product. Otherwise, it might end up in quite a bit of a battle of trying to regulate DeFi out of the scene, or trying to stomp on it or keep it kind of suppressed. Like with decentralized finance, it's offering you services that a bank does without the bank. So there's a lot of benefits with that. You're not being charged fees, you're not having to trust or deal with all these different rules. But at the same time, it's still decentralized and anyone can use it. So therefore, it's not regulated. You don't know who's using it, where they got their money from. So there's also those risks involved. So you kind of need a mix of both. You need kind of the trust of a bank's systems or them kind of regulating people and checking things, but also the trust of the technology that you don't have to rely on the bank to make sure that your money's safe.
Sure.
That kind of makes sense. More kind of the legal side and the KYC side,
Yes.
compliance side with the bank, but more of the finance side with the actual code and the decentralized finance.
Okay, and let's unpack that a little bit because it's kind of almost like you're going to the beach or the park for a workout versus going to a gym.
Right.
One's a public space and everybody else is doing their thing. It's kind of like, yeah, that's the free market.
Yeah.
That's where decentralized finance kind of sits. And then the other one is more of a curated, controlled, regulated space. That's the private gym where everyone has to pay to be there, pay to play. There's some safety in that, but also there's some limitations in terms of innovation and how far you can kind of collaborate and go outside the lane, right? So going back to what you were just saying, though, with that fusion between the two, is that something, do you think that will evolve naturally? Because I would assume that the incumbent would try to fight this off a little bit.
Yeah, I think if one kind of bank or company or even country starts to adopt it, that kind of mix, and it proves to be successful, I think it's only a matter of time before everyone has to start moving towards that. But if that never kind of eventuates, never happens, then I think it will be a bit of a battle for a while.
Yeah.
You've, like you said earlier, you've got the people that are really obsessed and they believe it's kind of the savior of the broken system in their eyes, and there's no other way. But then also you've got a lot of other people, kind of more like myself, where we see benefits of both and kind of negatives of both, and they're both doing their own thing, and you can't stop either. So either way, they're just going to have to battle out over time, or they will eventually merge and provide a better product and service for everyone.
And do you believe that actually will happen?
I'm not too sure. I hope it does, because that is the best outcome. Yeah. Otherwise, you're going to have two competing and a lot of issues with probably the two or customers merging between both over time.
Okay.
Yeah.
Let's break down a little bit more what it is. So we'll talk about what is decentralized finance. And
Yeah.
we've already loosely covered the fact that it's decentralized. That means that there's no central party acting as the gatekeeper. But what else can you tell me about what DeFi is?
It's finance or financial services that are decentralized. So traditionally, with most financial services, you obviously need the currency, which the government issues and looks after. And then usually you need a bank or a third party that you can trust and you agree with to make an action happen. So like borrowing and lending, for example, if you go to the bank and you take out a loan, the bank organizes it behind the scenes, they check you. And if they lend you money, then they're obviously getting that money from somewhere else, probably customer deposits or the way that the bank works.
Just created out of nothing.
Yeah, exactly. But with decentralized finance, you can do borrowing and lending as well. But obviously, you can't just mint, free value out of thin air unless you are a bank or a government. So decentralized finance, people can deposit their funds into it, almost like a savings account type thing, and then people can borrow out of that pool of funds as well. And any interest that they pay goes straight back to the depositor's pool.
Okay.
Whereas in traditional finance, you pay interest on your loan, the bank takes the interest, and they will pay someone with their savings account a small percentage, or they're borrowing from the government with the OCR. But yeah, with decentralized finance, because there is no technical middleman taking a massive cut, that's kind of the benefit side of that currently.
If I was just to visualize this, I have some Ethereum, let's say, and I want to deposit it in a decentralized application, right? A
Yeah.
dApp. And this is just an application that's sitting on the Ethereum blockchain where I can deposit or lock up my assets into this application. Is that correct?
Yeah.
And that would be known as what, a liquidity pool or?
Yeah, usually they call them liquidity pools, yeah.
Right, and that's the pool that then powers the borrowing and the lending function.
Yeah.
Is that right?
So you have like an application where people can borrow and lend different cryptocurrencies. So if you deposit your Ethereum into the Ethereum pool for this application, your Ethereum will sit in a massive pool full of other Ethereum, and that is available to be borrowed by other users. And when they borrow it, it starts to incur interest, and when they repay, the full repayment and the interest comes back into that pool. Anyone can withdraw at any time as long as there's enough liquidity to withdraw.
What would you say as a good brand name or something that people could check out? in terms of an example of this?
Aave, so AAVE, that's a really big one on Ethereum. If you just go to the website itself and try and understand how it all works, it could be quite confusing. But if you search it on YouTube, people have made really well-made explanation videos of how it works and how you can use it.
Yes.
So even if you just watch a video, you can make sense of how it all works without having to interact at all.
Okay. And this isn't stake. We're not talking about staking. This is actually just taking your assets and putting it into this application so that people can borrow it and then eventually, hopefully, repay it with interest, and then you share some of that return.
Yeah, so the interest is kind of just shared among the pool.
Okay.
Yeah.
Cool. Because the main functions, I guess, of the traditional financial system that we would all know and love would be borrowing money to, say, buy a home, putting our money in the bank account to get some savings, get some interest revenue coming in, and credit cards and all that sort of stuff. But in order for us to move forward, we need to almost simulate the same outcome in the decentralized world, which has its challenges because there's no middleman.
Yeah.
But is it too simplistic to suggest here that we're just substituting blockchain technology as the middleman?
I mean, yeah, it is just blockchain technology as the middleman. Yeah. So even banks could, incorporate their own blockchain technology and kind of build their own applications behind the scenes that will do this. But I mean, they've already got their own systems anyway, so it doesn't make too much of a difference.
Right. Yeah. Okay. And that's probably why maybe we're heading more likely towards some sort of tussle rather than integration in the short term.
Yeah.
Because there's probably a lot of architecture and rails that they've already invested huge amounts in. And it's hard enough for them to make minor incremental changes, let alone a massive shift where they basically just throw it out and then adopt distributed ledger technology, for example, into their system, right? So we've talked about Aave as a platform where you could deposit your assets in and earn some revenue as a result of that, earn some yield. What else can we talk about in terms of like examples of how decentralized finance can work?
Yeah, so you've also got decentralized exchanges, which were kind of the first mainstream popular decentralized applications or DeFi applications. So they allow people to trade from one token to another without having to have a massive company in the middle that provides liquidity, monitors everything, provides order books, and allows the trades between users. Obviously, they still need funds behind the scenes to work, and that's kind of where the decentralized aspect comes in. So one of them called Uniswap, for example. If I go to Uniswap and I want to swap one Ethereum to 2,000 USDC, which is a stable coin, I would enter my Ethereum and it would give me a quote, and I hit swap, and then once it swaps, it takes the Ethereum out of my wallet, gives me the 2,000 USDC, all done. Very, very simple. But behind the scenes, it's actually working with massive pools of different tokens that people have deposited. And on that swap that I did pay a very small fee that was just taken out of the amounts that I received. And that fee gets sent to those pools that people have deposited. So behind the scenes, there will be a pool of Ethereum and a pool of USDC. And when I swapped my, 2 Ethereum or 1 Ethereum to 2,000 USDC, it took my Ethereum and chucked it in that pool and then ripped out 2,000 from the USDC pool and gave it to me.
Right. So on the other side of that, there could be somebody that's doing the opposite side of that as well, right?
Yes.
They want to borrow some Ethereum and they're depositing their USDC to do so, right?
Oh, this one's more just an exchange, like a swap. So there's no so much borrowing with this one. With this one, people can provide their tokens into these pools as liquidity to allow the trades to happen.
I see.
And they earn that small percentage fee that each swap incurs.
Sure.
So, you might have 10,000 USDC in this pool and 5 Ethereum in this pool. So that pretty much means 5 Ethereum is worth 10,000 USDC or 2,000 each.
Gotcha.
And if someone rocks up and says, I want to swap 1 Ethereum into the 2,000 USDC, their 1 Ethereum goes into the pool. So now the pool has 11 Ethereum. And then out of the 10,000 USDC, 2,000 gets sent to the user. So there's now 8,000 USDC and 11 Ethereum. But those pools initially have tokens from people that can deposit it. Anyone can deposit it. So you can rock up and say, I would like to deposit into these 2 pools. And it kind of splits your balances in half and puts them in. And they just sit there and slowly earn those fees. So your share of the pool kind of, or your amount of tokens in the pool do slowly raise from the fees, but also your share of the pool, if that makes sense.
I always struggle with decentralized exchanges because I just can't, I can't get my head around this, but is it true that arbitrage opportunities get created if there's imbalance between these 2 pools?
Yes, yeah.
And that's how they stabilize, Is that right? People
Yeah.
would then take advantage of the fact that,
They realize they can trade and make a bit of money, and then the pools will stabilize back to the actual market price they should be at.
I see.
Like that kind of that example, I know it was a little bit confusing, but that example I used before where I swapped 1 Ethereum and got 2,000 USDC. The pools originally had 10 Ethereum and, sorry, what did I say? 5 Ethereum.
Yeah.
No, 10 Ethereum and 10.
Let's just make it up again.
Yeah, 10 Ethereum. So we'll say 1,000 each. 10 Ethereum and 10,000 USDC. I walked up and I swapped 1 Ethereum for 1,000 USDC. So that pool now has 11 Ethereum and 9,000 USDC because I put 1 Ethereum in and I took out 1,000. So now the price of Ethereum on that exchange is completely different, right? It's obviously changed because I've done quite a big trade compared to the amount of liquidity in the pools.
Right. And then that creates an incentive for someone to
Fix it pretty much.
Yeah.
Arbitrage it, yeah.
Right.
But also because we've got 11 Ethereum now and 9,000 USDC in these two pools that communicate for a swap. If there's a lot of volume on those pools and there's only that much liquidity, those pools will be earning quite high in percentages, or they'll be earning quite high from the fees generated because there's a lot of trading and not much liquidity.
Right.
So it
Gotcha.
naturally, or kind of, it increases the attraction to provide more liquidity because, oh, wow, this pool is earning way more in fees than this one. What am I doing in
See.
this?
So the free market forces will attract the capital
Yeah.
to create the liquidity that's required to justify the risk that people are taking because
Yeah.
of the lack of liquidity. And then you have people arbitraging on the edges because of any slight little mismatch there. But that's probably more true when liquidity levels are lower than
Or,
higher.
massive trades, yeah,
Sure,
one or the
massive
other.
trades. Okay.
But like I said, if it's got low liquidity and lots of trading volume, the amount of fees that those depositors in those pools are earning is very, very high. So
Right.
it attracts more liquidity.
Okay.
And, if it goes really, really low, there's not much trading going on between these two tokens, but the pools have a lot of liquidity. People will eventually pull their liquidity out and put it somewhere else that's going to do more for them.
Okay. Oh, that's fascinating. Okay.
Yeah.
So that would be a decentralized exchange or a DEX, and PancakeSwap, SushiSwap. These are all just like open source protocols that you can basically copy and augment and
Yeah.
release in the wild again, right? That's fascinating. And because they're using just bits of blockchain technology, this is just code that's hanging in the internet, like a bank account, like a vault, but it's a digital vault with certain rules set up with it. Is that kind of true?
Yeah. So they just run on, they call them smart contracts, which is a bit of code on the blockchain. And it basically says when this action happens, this happens. It's an agreement, like an actual contract.
Yes.
And because it's on the blockchain, once it's on the blockchain, it can't really be edited at all. So when you interact with these DEXs, when you do a swap, behind the scenes, it's actually interacting with a contract. It's saying, put the user's Ethereum into this pool, and then take out whatever's owed and give it back to the user. So they all work off that bit of code behind the scenes running the show.
Okay, that's cool. All right,
Yeah.
well, I'm getting it. Hopefully
Yeah.
others are getting it as well. So we've talked about liquidity pools, decentralized exchanges, and what next? What else could we cover in the decentralized world?
That's kind of the gist of the big side of DeFi at the moment. Of course, there's been a lot of people trying all sorts of crazy stuff. Once you start kind of bringing in the ability to mint new tokens out of thin air and create all sorts of things, people have gone a little bit crazy with the economic side of it. Those two services are kind of, especially the decentralized exchange, it's taken a lot of volume off normal exchanges like Binance or Coinbase, those really big companies. I think over time it's starting to pull a lot of their volumes out and move it towards more this model.
Right.
Where, like what with FTX, for example, FTX, kind of went bankrupt, collapsed. A lot of people's money are locked up or lost. But that was a centralized exchange. So if you wanted to swap your tokens on FTX, you can. But you're also trusting that the exchange is not playing with your money. It's not going to lose it. It's not going to get hacked. Whereas with the decentralized side, it's kind of in and out of your own wallet. You don't have to worry about that kind of stuff. So with FTX collapsing and a lot of these centralized exchanges having issues and high fees, the volumes are slowly leaving towards the decentralized version of exchanging.
Interesting.
So even in the crypto space, there's a battle slowly going on between, do I use the traditional side of crypto, like a big company like Binance, or do I go use the blockchain side, which has its pros and cons, but
Yes. Binance, FTX, Celsius, that was kind of like a story of the integration between the traditional and the DeFi world coming together.
yeah.
Sort of, but almost like the worst of both worlds in a
Yeah.
sense, right? You lost a little bit of assets in Celsius, I believe, as well.
Yeah.
So did I. And for our listeners, just to understand what that story was from your perspective, can you just describe how, why, what happened?
Yeah, so Celsius was trying to work like a bank, so you could deposit your coins and earn interest. And supposedly that interest was being paid by people that were then taking out loans through Celsius, like crypto loans. So
Kind of like what we were talking about before,
yeah,
decentralized application, but
it's like a centralized or like a centralized version of the DeFi applications. But once again, because we're using a centralized version, instead of trusting code on the blockchain, we're trusting the Celsius as a company, that everything behind the scenes is going as they say it is. They're not lying to us. But no, sadly, they were lying to us. They were playing with our funds and trying to invest it.
yeah.
They were running more like a hedge fund behind the scenes and telling users that, it's just a simple borrowing and lending between customers. That's how we pay the interest. Kind of like the very bare basics of how a bank works.
But in reality, they were doing all sorts of funny stuff behind the
Yeah.
scenes with the assets to try to goose the returns so that they could generate, I guess, presumably a supernormal profit for shareholders,
Yeah.
right?
Or try offer higher yields for customers' deposits to try get more funds into the platform.
Like a Ponzi scheme.
Pretty much, yeah. Like on the bare basics of it, when you look at Celsius, it is a Ponzi scheme, and they were running it as like a hedge fund to try and make more profits to, keep it alive.
Yeah, good fun.
Yeah.
And so that's kind of like a cautionary tale of what can happen if there is this eventual integration. And every time there's a mistake, a problem, a crash, something breaks, it's really fascinating, I find anyway, in that it makes it stronger. It makes the system, makes the participants a little bit more streetwise.
Yeah.
Like I know back then when I signed up to Celsius, I put a very small amount in there because I wanted to almost establish the fact that I was holding my crypto assets as a long-term hold, and my objective was to derive yield long-term. Because it's a high-risk investment, I want to have a long investment horizon so to maximize my chances of getting a really good return from it. I don't really necessarily agree with the tax position where every time you change it, you should be paying tax on those gains, because I'm trying to get yield on it. Shouldn't be
Yeah.
taxed both. That's my personal view. And so that was a way of kind of almost proving that in a way. But now that we've seen what happens there, and that we can't really trust it when there is centralization and the technology is still being developed, maybe that was too far too soon to kind of branch out like that. I guess that's probably the importance of just trying new things, but only with a small amount. Is that kind of your strategy as well, that you experiment a little bit, or do you kind of go all in with everything that you try?
Yeah, just try a little bit and experiment, try to understand how it works and the risks involved. Sadly, with Celsius, I did spend a lot of time looking into the company. I did really believe the story, and did trust them, as many other people did. So that's a lesson learned the hard way. I think a lot of people in crypto, they do get burnt along the way by, usually it is trusting in people that they don't know, or companies that aren't really telling the truth. So even like you said before, whenever there's a crash or a collapse or something like this, it kind of makes the whole kind of, what do you call it, the crypto economy a little bit stronger. Usually it does kind of teach people a lesson of stop trusting third parties, trust the tech, move away from that and trust the tech. For those people that do stay in crypto and still look further into it, they do move towards more, once again, the bare basics of crypto. Have your own wallet, manage your own coins. Don't lend them out to other people. Don't give them to people. Or if you are to do any kind of activity, you can now do it on the blockchain, where it can't be argued, can't really be falsified. You trust the code. You don't have to trust a human that's telling you something. So,
Is that the natural conclusion then, that eventually all participants in the space will just get that? They'll finally get that. No more trusting people, all right? We've learned that, and finally. Do you think that's kind of like the natural conclusion we all need to come to very fast?
Yeah, I think naturally. But if you look at the history of crypto, it's always been like that. One of the first big exchanges, Mt. Gox, went under. And so a lot of people back then, they didn't really have a bad experience of, I trusted this company with my Bitcoin and they went bankrupt, they lost it all. That happened. So that obviously taught people a lot of lessons. And then a couple of years later, similar things happened with similar companies. We had Cryptopia in New Zealand, also same situation. But even just in the last year alone, we've had FTX, we've had Celsius, we've had BlockFi, we've had all these other companies that are having issues. And even I myself, been in crypto for 5-6 years, still fell victim to Celsius. So yeah, I think a lot of new people get into crypto and they get swayed by these big companies. They're the ones with the big marketing budgets. They can really get people on board. Whereas the original tech of set up your own wallet, do it yourself, you have to go learn that from random people on the internet that are trying to teach you kind of the best way to do crypto. Not these companies with billions of dollars that they're throwing
Which is
around.
not what you would normally think, right? Like we've probably been taught not to trust random people on the internet telling you how
Yeah.
to make money. Yet the alternative is where people have lost money
Yeah.
by looking at the brands that regulators have, I guess, passively endorsed by lack of regulatory action or by just big brand names seeing the marketing Super Bowl ads.
Yeah.
And that's actually where the danger was, ironically, not your YouTube channel or somebody else's YouTube channel that was actually powered by somebody who's just genuinely enthusiastic about something and sharing it from the goodness of their heart, not trying to rip you off, right?
Yeah.
So it's a weird little insight as to the world that we're heading into, I think, as well, where it's not just enough to kind of trust these major brands and believe the major narratives that are always given to us. Yes, that's the default position, but you always need to be testing it, don't you? Because the future isn't necessarily going to be the past, it's going to be the future. It's a different direction.
We don't know exactly where we're going. Yeah.
Yeah. So how do you kind of think about that in the context of not playing around, but in the context of actually interacting in decentralized finance? How do you inform the direction that you're learning? Like, do you kind of just look to where the fire is, where the excitement is, where the fluff is, or do you kind of just look at the fundamentals, and how do you kind of search where you want to investigate next?
Or like you hear things from like different YouTubers or even friends. Oh, I found this and I can make 5,000% in the next year. Straight away, some red flags. That's not going to last forever. It can't be that great. So yeah, you look into a lot of things, and pretty quickly you can identify if something's going to make people a lot of money, but it's also going to crash very, very soon. You can tell if it's just not real, like a bit of a short-term Ponzi-like scheme. But also like even the borrowing and lending, like Aave, for example, when you come across that and you understand the model, it all makes sense and it will always be there and it will always just work as long as people are using it. The only time that Aave will never work is if nobody wants to use it. So yeah, you kind of just learn along the way, and things that actually make sense, like a lot of the traditional financial services that work in DeFi and you understand how they work and they make sense, they're always going to be there. So a lot of it is just learning, trying to understand, but that's kind of where a lot of the excitement or the passion about economics and finance comes in. If you're trying to understand how Aave works, if you have no interest in finance and money and how financial services work, it's going to be very, very boring to you. But yeah, like with decentralized finance, there's only been a few things I've come across where I thought this is a real genuine thing that's going to be around forever as long as people want to use it. Like Aave, they want to borrow and lend, that's always going to be there. Uniswap, people are always going to want to swap their tokens without having to trust a company in the middle. That's always going to be there. And it's very organic. It's very straightforward. Everyone knows how it works that is involved in it technically. And there's kind of no smoke screen or no one that you have to trust blindly to use it.
Okay. As much as you can you guide me through just a couple of simple strategies? Because I've come across an idea, and I might not use the right words, but the idea is that you put your assets into, I guess it would be something like an exchange, a decentralized exchange. You would then take that, you'd put it into a lending pool. Basically, it's an over-collateralized loan, but then you get given some other tokens that you can sell to service that loan and then do it all again and create these loops.
Yeah.
What is that called? If you can tell me what that's called.
I think that might be just using like Aave, for example. So with Aave, when you want to borrow, if you want to borrow, $5,000, you do need to deposit. You need to deposit cryptocurrency as a security that's worth more than the loan that you're wanting to take.
That's
so
the
it's
over-collateralized loan.
Yeah, so it's always backs lending, and if you fail to pay and your collateral loses value, then it automatically liquidates and covers all the holders. So it's completely secured lending. But that means I could rock up and deposit $10,000 of Bitcoin, and then borrow $2,000 of Bitcoin from that, and then redeposit that new $2,000. So now technically it says that I've lent $12,000 of Bitcoin, and I've borrowed $2,000 currently.
Yeah.
So that me up to now $12,000 allows me to borrow again, because it stops you at a certain rate. It might be 50%. So if I have $10,000 of Bitcoin, I can only borrow $5,000 of Bitcoin. Yeah. But if I borrow that $5,000 and then re-lend it back in, I can then borrow, whatever another half is that will not push me over the edge.
Yeah.
So some people can do that, and with some of these borrowing and lending protocols, they do reward you with the interest that borrowers pay, but they also kind of top you up with a bonus of a newly minted token that runs the whole ecosystem, that has a bit of value because it's used in the whole ecosystem. They call them utility tokens, basically. So they reward you in a little bit of that. So you can do that to earn more of those little bonus utility tokens.
So you sell those utility tokens, put it back into the pool to almost create like a compounding return effect.
Kind of like you get rewarded in it for using the system, and then you can sell that for a little bit of money. But of course, like if I deposit my $10,000 of Bitcoin and I borrow $5,000, I'm going to be earning that little bonus off my 10,000 deposited, my 5,000 borrowed. But then if I redeposit that 5,000 I borrowed, now I've lent 15,000, got 5,000 borrowed, can borrow some more. Basically, I'm topping up that bonus that I'm getting on the total amount. But obviously, that turns into a lot of risk as well when you start doing that, especially if you're borrowing and lending different assets. If one drops in value versus the other, and one's a collateral and one's a loan, you could get liquidated.
Right.
And trying to unravel all of that can be quite a mess.
Yeah. That process is probably what you could do maybe at the start, where there's a brand new platform that you're using, new utility token that has a lot of value because everyone's kind of FOMOing into it.
Yeah.
And then maybe you get really outsized returns for a brief moment of time. But like you say, there's a lot of connections to make that all work.
Yeah.
And if something goes wrong, deck of cards, everything is all gone.
Yeah,
to blitz, right?
you can get liquidated completely if the market moves quickly and you are playing with the liquidation limit. Yeah. Like I said, if you deposit $10,000 or you're allowed to borrow 50% of your deposits, basically.
Yes.
And let's just say the coin that you're borrowing goes up in value, but your collateral doesn't, then you're getting closer to that 50% limit of how much you can borrow.
Yes.
And once it reaches its kind of liquidation mark, the protocol or Aave, for example, will automatically start closing your loans and selling your collateral to back the lenders.
Right.
And the pools.
Right. All of it? Like, do you lose the over-collateralized portion as well? Do you get that back still?
It will start liquidating that until it gets to a point where it's healthy again. But
Yeah.
if the market keeps moving in the direction that you don't want it to, it will eventually liquidate all of it.
Right.
So you'll still have the loaned amount. You kind of walk out with the same amount you put in because it's liquidated it to repay others, but there's usually a bit of a fee involved as well that pays out the pool. So that's another way that the pool earns more money.
I see. Okay. And people might wonder, why would you even bother putting, say, $10,000 worth of Bitcoin in if you want to only borrow 5,000? We'll just keep the original amount, right? So what is the use case? Why would people sometimes want to take out an over-collateralized loan?
In certain countries, that's a tax advantage. Instead of selling your Bitcoin and realizing the profits, you can borrow against it and use that loan for whatever you need to at the time. Sometimes for other people, they might take risk and borrow and then invest that money, obviously taking quite a bit of risk. But let's just say like you live in a country where that tax advantage does exist, where if you've got $100,000 of Bitcoin and suddenly you need to pay a $20,000 car bill, or you had a car crash, you didn't have insurance or something like that, instead of selling $20,000 of your Bitcoin and either realizing a loss or a gain, especially if you want to hold on to it for the long term and invest, you can deposit it into one of these pools and you can borrow $2,000 or $20,000, of a stable coin, bring it back to your bank, do whatever you need to with the money, and then just eventually pay back that loan whenever you like. There's no kind of terms of you need to pay it by the state. There's no credit checks because it is over collateralized. They don't care about that. It's just instant borrowing and lending that's fully secured.
Yeah.
And you don't have to trust really anyone in the middle but the code.
That's cool. Let's say I have $1 million worth of Bitcoin. I put it into one of these protocols and I borrow $500,000 worth of Bitcoin back, or I borrow $500,000 of USDC, for example. Put that into my local currency, buy a home with that. Then I go to a bank, borrow 80% of the value of that home, put it back into it, go the other way, and then get out of that position. Is there any arbitrage opportunities like that you've seen where people are kind of using over-collateralized lending to bring it back into the analog traditional finance world, then use lending and bring it back into the DeFi world?
I haven't seen it myself. Obviously, it depends on the interest rate that you have to pay on the mortgage from the bank in that situation versus how much you're paying for the borrowed USDC from the decentralized protocol. Quite often, these decentralized borrowing and lending applications, the interest rate is lower than traditional finance. Often, there's quite a lot of assets deposited in these pools and not actually that much borrowed at any given time. Even if it does go up, so let's just say we've got $10 million in this pool, allowing people to borrow out of it. Let's just say there's 5 million borrowed out of it. The actual interest rate that those borrowers are paying will be high because of the amount that's borrowed. So the interest rate that the borrower pays in DeFi changes all the time, and it depends on how much is borrowed versus how much is in the pool.
Okay.
So that also means that, like, let's just say there's a total of $10 million in this pool. You rock up and you say, oh, I'm going to borrow 5 million of that. All of a sudden, your interest rate that you were paying on that borrowed 5 million, or that pool was earning, that depositor's pool might have been like 2%. And then if you borrowed a huge chunk out of that, it could jump up to 50 or 70% interest per year.
Wow. Okay.
That also, once again, encourages depositors to go, wow, if I deposit in this pool, I can earn up to 70% on my crypto sitting there.
Gotcha.
So,
Okay.
yeah, so like it all depends on the interest rates, especially if you're, what the example you said, if you're going to do that with the bank, how much is the bank charging you on the 80% you're borrowing to then repay that?
Yeah.
And because the DeFi interest is always changing, it's really hard to do.
Sure. Yeah, I imagine that would be an incredibly risky and complicated thing to pull off.
Yeah.
And if of course, if we knew where the market was going, we'd all be geniuses. But if there was a bull market happening in the crypto
Yeah.
space, maybe that would make sense to take that risk. But whew, you wouldn't want to get that one wrong
No.
because you've just lost everything, right?
And yeah, you're completely kind of risking your Bitcoin at the end of the day. That's the liquidation risk.
Yeah, correct. That's the thing that's arguably more valuable in this context. So, okay, so how do you personally use DeFi? If you can share that, like what do you use it as an everyday person who's aware of how this works and you're confident to the extent that you participate in it regularly. So what do you kind of use decentralized finance for on a day-to-day basis?
In the past, I've used decentralized exchanges rather than centralized ones, just for trust and also the fees. So a centralized exchange like Binance, when you withdraw, they do charge you a fee. They do have to take a fee regardless because they do have to pay for the transaction to be sent on the blockchain. But quite often the fee is 4 to 10x higher than the actual blockchain fee. And you can see that yourself, So if you withdraw 1,000 USDC, Binance might charge you 20 USDC, and then you go on the blockchain and see that the fee was $3. So
Okay.
they've got staff teams, they've got a massive company, they've got a lot of costs, so it makes sense they want to make money. But as a user, if I can then instead just use a decentralized exchange and I pay a much smaller fee, there's no kind of withdrawal fee, or I do have to pay that blockchain fee, but I'm paying it myself, so I'm paying $3 to make that action happen, rather than paying Binance $20 to just send it back to me.
Yeah.
And also with the trust-based side of things, once again, after FTX and kind of the history of a lot of crypto companies that have tried gaining people's trusts, have done bad things with the money, they've gone bankrupt, they've lost customer deposits. Decentralized finance kind of gives you that peace of mind if you understand how to use it and you can trust it yourself.
Yes. Okay. Will it get easier for the people that are not so technically minded to start using these tools?
I think with time, there's a lot of smart people working on the industry. Of course, since the market's dropped, a lot of people have pulled out, but there's also a lot of really, really smart minds that are working on it. Like, considering that currently we've got all these decentralized applications that were probably built by anonymous people, some of them we don't even know who's behind them, but you can see how it all works, so you can then trust that it does work. There's a lot of smart minds working behind the scenes. Nobody knows who they are to make the stuff happen, make it more user-friendly, more adoptable. But personally, I don't see it happening until we actually do have a merge with banking or traditional finance with the technology.
Okay, so maybe we could speculate on what that merge looks like in terms of what would be the avenues, like we talked about FTX and Celsius and how that didn't really end up, that merger didn't really end very well, but how do you see that evolving where there's a closer working relationship and integration between TradFi and DeFi?
You need either like banks or some kind of like regulated institution in countries to actually support cryptocurrencies, and almost be backed by the government in a way that these companies are very well regulated. Celsius and FTX, they were companies, they were legitimate people, executive teams, but because the industry is still not kind of regulated very well or completely in a lot of countries, especially America, it's very kind of up in the air what kind of regulation works and how it should be regulated. These people were kind of given an opportunity to have the power of a bank with crypto, but without having to follow any rules and no one really checking in on them. So
Here's a bunch of loaded guns, just do whatever you feel
yeah,
like doing.
yeah.
Yeah.
So I think like having the trust of the actual blockchain and the technology, but then kind of having the regulation and the enforcement of a bank to keep things kind of in control. If you can find a way, which some companies are working on now, if you can find a way to give people access to crypto where the organization that's helping them doesn't actually have direct control over their finances or their cryptocurrency, can't just freeze it or move it, but you can still offer them services and help them, that's kind of the perfect situation. We are slowly getting there, but it's a lot of work.
What about the incentives then? Like, do you think the incentives need to be worked on that motivate, say, traditional financial systems to get involved? Because right now, like if I was a massive banker, I would be probably quite close to the regulator.
Yeah.
And the regulator is probably not really knowing what's going on. Things are moving way too fast and they're just trying to catch up. So what about the incentive? Like, how would a bank be incentivized to want to get involved?
I think potentially the amount of volume. I think over time, if enough money flows towards crypto and decentralized applications versus traditional finance, of course, traditional finance is going to be huge with mortgages and stuff like that. But if enough chunk of users and customers in the traditional finance world start moving more of their activity towards decentralized finance, I think that will be a big incentive. I think that'll be the main incentive for banks or traditional finance. They don't want to lose the current volumes or activity or percentage of people that they have. And they haven't really had a proper threat, I don't think, at all in history of that happening.
That's
as far
right.
as kind of how it currently works, right?
Yeah.
Like I can't just start a bank tomorrow and then try offer better incentives and bring everyone's money over. But once again, it is a big battle of trying to make it easy enough that enough people will move over for banks to also start to do it. Yeah, it's a very much kind of trying to chase traditional finance to get to a point where it is competitive enough that traditional finance takes it seriously and wants to either adapt or compete on their own terms.
Your views around crypto in general are probably some of the most balanced that I'm aware of
Right.
so far, in terms of you're not necessarily a Bitcoin maximalist, but you're also into DeFi. You're kind of, am I correct in that you've got a foot in each camp? You're not extreme. You're not like anti-Bitcoin.
Yeah,
but
I do like Bitcoin, but I also love the tech of DeFi, but I'm not completely, I hate that or I love that.
Yeah. That's actually quite rare though, isn't it? Like you often see people that are like ultra Bitcoin maximalists. Then you're on the other side where Bitcoin is just so old and fuddy-duddy and conservative and
Yeah, there's
stale
definitely
and boring.
both those camps. Yeah.
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 And do you think that matters? Like, do you think we can all kind of get along in the crypto community, or do you think that there's one narrative that should beat it? Like, should we all be Bitcoin maxis, or the opposite, or be blended?
I think they'll always be there, and a lot of them are kind of people that, yeah, like once again, they're very passionate about one thing, and everything else is garbage. But I also think those people are probably the most loudly spoken ones. So I think there's a lot of balanced people in crypto like me, or people that have been around for a while. But the ones that you hear the most from are those that are, Bitcoin is kind of our savior. Everything else is rubbish. Don't trust it. And whenever anything happens bad in anything else but Bitcoin, they'll point to that as proof. And then you'll also have these people that are obsessed with Ethereum and decentralized finance and say Bitcoin's so old, it doesn't do anything, it's boring. This is where things are going. I think there's definitely a fine balance, though. I think those two camps will always exist, but it would be great if everyone could work together. There are a lot of people that are working for the whole industry as a whole to move forward that are more balanced. And yeah, I think those are the ones that trying to support more.
Yeah. No, that's cool. Because I guess you see that also just with traditional finance and the crypto ecosystem. It's like oil and water at times. And like I'm keen to kind of shake it up a little bit and emulsify it a bit and make sure it's more integrated in terms of how we think about it, because that has to happen probably before there's proper integration between TradFi and DeFi. There needs to be intellectually and conceptually, we need to also integrate it in our minds.
Yeah.
What are you following at the moment, or is there anything kind of new and exciting that really excites you that you've been following?
Nothing too exciting at the moment. I have heard of a few blockchains or companies that have built blockchains that are trying to merge decentralized aspects of crypto, kind of like DeFi services, but also everyone that joins this blockchain or can use it has to be verified, ID verified, KYC, anti-money laundering. So you've got this company that has created the blockchain, but they don't really keep it online, or they don't control it. They can't step in and stamp on things, but they also know every single user on it. So when it comes to laws or kind of any kind of financial crime or anything that might happen on that blockchain, can instantly be linked to the person that did it.
I see. So it's kind of like a gated community.
Yeah, so it's like it's giving people that want to actually do it properly the chance to use DeFi without having to worry about kind of theft or hacks or anything like that. Because if anyone on that blockchain finds a way to commit theft or hacks or whatever, their ID is straight away linked to their account. Everything can be seen. So it's it's a really dumb idea as a criminal.
Yeah.
But it also allows those people that are happy to give their ID over to a company to ensure that they can use this blockchain. It's all still decentralized. It's got the great aspects, but everybody is kind of known by this one central entity that is only there for the purpose of if anything goes wrong or kind of government step in, everything's kind of sorted.
Okay, that's cool. So that's kind of like a curated or a pre-programmed blockchain, or it's just gated, really, right? So if you want to come into this one and play in this sandbox, you need to be identified, and but once you're in there, fill your boots, do whatever you want, type thing.
It'll be like if someone created they cloned Aave on Ethereum, but to be whitelisted and have access to Aave on Ethereum, this clone, you do need to verify your account and your ID with this third party that will just keep your ID and just know your account. That's it.
Yes.
And they only step in if they really need to, or if regulators are coming for them or something like that.
Right.
But it also just adds that trust. Like if anything went wrong on this Aave protocol, this clone, we can identify what went wrong, and if someone abused it, straight away go for them.
And that's the one thing that people often don't really get. It is super, super transparent on blockchain. So if you want to be a criminal, go for it. But it's going to be a lot harder if you're using these technologies, because you can kind of still see what you're up to.
Yeah.
You leave a little trail of breadcrumbs, don't you?
That's the thing, yeah. It's fully anonymous until you personally can be linked to a wallet or like an account on the blockchain.
Yeah.
So you could be trading on Uniswap, and there's no way that if nobody can trace your account to you, we don't know who that is. Could be anyone in the world. We don't know what kind of money they have. The minute that we can identify that wallet or that account to Darcy, all of a sudden we've got all of your history. We can see everything you've done. We can link it back to other wallets you've been sending and receiving from. So it is anonymous, but only to an extent.
Yeah, until you get found out. And then that's probably what's going to make things like a non-argument from a regulation point of view when that becomes a little bit more. So what you're saying there with that development or how things are evolving in that space is that the privacy issue and the transparency issue, if we can solve that and connect it to people's ID, who they are, then far more likely to build trust in that ecosystem, right? And maybe more mass adoption will come as a result.
Yeah, so for that example, like I said, the blockchain where they've kind of ID verified everyone that's using an app or that blockchain. To the users, everyone else is anonymous. You don't know anyone else. It's just this one third party that's there that stores all the data and is there for kind of legal reasons if anything was to happen.
Right. They're the parent.
Yeah, pretty much.
They're the responsible parent in the room.
Yeah.
That's good.
Yeah. But they're still giving you the toys to play with.
That's right, yeah. Okay. Central bank issued digital currencies as a way to foster faster adoption into the decentralized financial world. Do you think that having like I say, a New Zealand dollar, which is a central bank issued digital currency, do you think that would make it easier for New Zealanders, for example, to transfer their analog wealth into the digital realm and therefore more likely to create more adoption in this space?
Yeah, I think those digital currencies, they will help traditional finance a lot. You'll probably be able to send money and receive it between people very instantly. It'd be very, very nice. But I'm not too sure how it will interact with the crypto side. It depends if it makes it easier for people to go from digital currency in their bank to crypto and back. But I do understand with CBDCs, it does kind of give more power to control what can be done and what can't be done with money. So it really depends on how the CBDC is used by the government. They might be able to easily just block all transactions from CBDC into crypto transfers or buying and selling.
Yeah.
Or it can make it a lot easier, make it instant, less fees for everyone involved, much more easier to on and off ramp. But it all depends on that.
I don't know how it's programmed. Yeah.
Like I'm excited for CBDCs for traditional finance. I really don't like that if I send someone money, it could take almost a day to arrive in their bank, same country. But for that aspect, it is a little bit worrying as well, kind of the privacy and the control that it gives to the government on what you can do with your money.
Yeah. Okay. In terms of innovation and how people collaborate within the DeFi world, is there a place where people go? Like, is there a place? Because I recently discovered when I was just playing around with a lot of these AI tools that are coming out.
Oh, yeah.
I recently discovered this really cool website called Hugging Faces. I think it's called, huggingfaces.com, I think it is. don't know if you've heard of that.
No.
Or huggingface.com. And fascinating place where it looks almost like it's a network of people that are all collaborating using these open source AI platforms. They're meshing them together and they're creating new things like Lego blocks, and they get upvoted, and the ones that seem to do really well, maybe they get taken out by capital and they get supercharged and off they go. I don't really understand enough about the crypto ecosystem to know whether or not there's a similar place where people go to collaborate and share. But is there something like that where people who are into crypto can kind of just see at the grassroots level what people are inventing and what people are kind of developing next?
I think there are spaces. A lot of it gets more technical, though. You've got GitHub where, because everything's open source, people quite often put their projects on GitHub, which allows anyone to go read the code. You can even just copy it. You can do whatever you want with it. So like with Uniswap, for example, that's all on GitHub, and a lot of these other decentralized exchanges, all they've done is just copied Uniswap's code, started to adjusting it to the things that they want and how to make it better and different. So for the kind of the technical geek side or the developers that are really onto it, heaps out there for them.
Yeah.
Kind of for your average consumer or just investor, you've got Facebook groups. You've also got Reddit, which is quite cool because Reddit is quite anonymous as well. It's not kind of a public face or public name. A lot of people are more open to talk about all sorts of stuff that they're looking into or they're trying out.
Yeah.
Yeah, you can even ask questions about certain things you're learning. People will be happy to help or share what they know.
Yeah.
Or try to link you off to maybe like a specific video or content that covers it more in depth.
Yeah, interesting.
Yeah.
Okay, and what do you see like going 10 years in advance? Like this is pretty full on, right? 2033 now seems so much closer than what it did 5 years ago.
Yeah.
Not just because we're 5 years closer to it, but because time seems to be speeding up in terms of how fast things are changing. But 2033, a lot would have happened 10 years into the future. What does it look like in terms of how we are borrowing, how we are investing? What can you describe to me? Just jump into the hot tub time machine.
Yeah, I think
Come back.
I think Bitcoin will always have its place. I think it will kind of do well to an extent. I think you know Bitcoin quite well as well, and there's a lot of people that are strong about it. Kind of like how gold bugs are, gold is key. But I honestly don't fully know where we're going to go. I think this decentralized finance thing 4 years ago, I could have never imagined that you'd be able to swap and borrow and lend, and there's no company that you have to trust. It's all just done by code on the blockchain. Never saw that happening. Could have never guessed NFTs. NFT technology is great. The art side of it, not a big fan of, but the technology is insane. But even over the last 2 years with the NFT side as well, that's brought out a lot of community sides or a lot of community to crypto. So it's allowed people with communities or clubs to suddenly integrate with crypto and allow their members to kind of hold certificates or tokens that represent them as a club member or things that they can do within the community. Yeah, I'm not too sure really. I definitely do see things like maybe Air New Zealand Air Points, those kind of loyalty programs. They could very easily adapt to using blockchain technology themselves. It would improve like vastly for both customer and company if they can do it right.
Yeah.
But yeah, I think definitely that mix of traditional finance and using the DeFi technology has to come together for it to grow.
I think it'll be fascinating, right? Like
Yeah.
Metaverse, NFTs, decentralized finance protocols. You mix that all together, dash of AI in the middle of it.
Yeah, that's another thing too. In the last 6 months, the AI has really come through and kind of surprised everyone.
Yeah.
So it kind of makes you realize, like when I learned about the AI, especially ChatGPT, it's kind of like, wow, I have no idea where the next 5 years is going.
I know.
This has just popped up. Like I've heard a lot about AI on YouTube for the last 5 years, and it's all just kind of been, oh, it's going to be amazing, going to be amazing. But once you actually see it in action and use it, kind of,
The light
changes
bulb
your
goes
whole
on,
mind.
doesn't it?
Yeah.
It's unbelievable. So you mentioned before with Uniswap, you can go on and just get the code off of GitHub. Well, what about if you just did that, paste it into ChatGPT and say, build
Help
me
me
something
out.
with this,
Yeah.
please? And then you could launch that.
Yeah.
Amazing, right?
That's the cool thing is a lot of it is open source. So someone or a group of really, really smart minds have built that, and then someone else with a really smart mind in a different aspect can then use it to adopt it into something new. And that's the really cool thing. It's open collaboration, basically, privately.
Yeah.
Anyone can do it.
As long as we have access to the internet, the sky's the limit, right?
Yeah.
That's pretty cool. So, Sarn, as we finish up, where can we point people to if they want to follow you and just get to know the content that you've put out there in the past?
Yeah, so just on YouTube, just under my name, Sarn, S-A-R-N. if you search it, it comes up. There's no one
It
really
does,
else
yeah.
with that name.
Where does that name come from, by the way? I don't know. I don't know if I know any other Sarns.
Yeah, I've only met one other about 10 years ago, but my parents met a man in Rarotonga, and they had, I think, a dinner with him and his wife that became family friends, and that was his nickname.
Oh, cool.
And they just liked it. So I don't know kind of traditionally where it comes from, but that's
Yeah.
the story of my name.
Oh, that's cool.
Yeah.
Okay. So search for Sarn on YouTube.
Yeah.
And then Twitter. Whereabouts are you active in terms of social media?
Yeah, I'm not too active on Twitter, but LinkedIn, I'm definitely on LinkedIn, especially if people want to reach out and have a chat. So
That's
yeah.
how we got together. Yeah.
Yeah.
For sure. Awesome. Well, thank you very much for your time. Really appreciate you lifting the bonnet a little bit with the world of decentralized finance. So thank you.
Thanks for having me.